Welcome back, YouTube. In this video we're doing a trade breakdown on a trade that I didn't even take, but the setup was just so perfect. It's everything that I say in all the previous trade breakdowns that I've done. So if you haven't seen those, go back and check those out. I'm very short and to the point. So what is it? What is the criteria? 1, 2, 3 criteria. Price must break structure, okay? Second, price must come back, pull into a zone where it broke the structure, fill a gap in the market, and then reject that gap and then go back into the direction that we are biased into taking a trade. Okay? It's the new year. I've been taking some time off, get my mind mentally ready for this new year of trading, trying to level up. So that's why I didn't take this trade. A little bit of FOMO kicked in after I saw it, but it is what it is. Long-term health, long-term mental health, and being able to pull the trigger when you see these setups in the long run is more important than trying to catch every single setup every single day and not being there mentally. Okay, so this is the trade breakdown. Okay, break of structure. 1, 2, price must come back up to an area where it broke structure, fill a gap in the market. If you don't know what a gap is, you can go back to previous videos and see what I'm talking about, but I'll still explain it here. And then price must reject that gap and then start trading back in the direction that we think price is going. Okay, in this scenario, price short sold. Okay, the setup was a short sell. So without doing too much overall chart analysis, the market was more biased on the higher time frames to go for a short. Okay, so just real quickly without getting too deep into it, although you can see that the market is trending up right here, on the 5-minute chart. Overall, when you come back out to the hourly chart, it's kind of consolidating. Okay, it's kind of consolidating, and it kind of reached this level, this key level of resistance up here. Okay, so price at this order block and this level of resistance had gotten to it 1, 2 times and then rejected, and then it looked like it rejected yesterday right here, and then tried to break above and reject it again. Then we saw a break of structure on the hourly chart right here. Okay, so that's just kind of higher time frame analysis, just to be kind of quick with it. But I want to focus on the actual setup on the execution time, which is the 5-minute chart for us. Okay, so it's very important here that 3 things happened. As you can see that I mentioned, price was trending up temporarily, but then price broke out of this trend. Okay, you can see right here, price broke out of this trend, tried to get back up there, rejected, and then proceeded back down and breaking more structure to the downside. So price rejected the structure right here, right? Broke out of structure right here, broke out of this trend, and then tried to push back up right here, rejected, and started making its way back down. And as you can see, this is where it is right here now. Okay, so on the 5-minute chart, which is our execution time, and I mentioned this in other videos, this gray area, this is our kill zone. This is when we take trades. Whatever session that you trade in, Asian, London, New York session, you got to find out what session works for you, and you got to find these setups within your session. I trade New York. That fits with my schedule. That fits where I'm at in the world, and basically that's when I see that the market is most volatile for this setup for me and my style of trading. Okay, so 3 things. 1, break of structure. Where's the break of structure? We have a break of structure here. Let's see. First of all, we have that break of structure over here. So we have this huge break of structure over here. Okay, price broke from these key levels. Price broke right here from these key levels. Right here. See, tap, support, break of structure. Try to get pushed back up here and break these highs, these 2 previous levels of resistance, and reject it, okay? And so we have a little trend here. Even within the big trend, there's a smaller trend right here where price was kind of respecting right here, low, higher high, higher low, higher high, higher low, lower high, lower low. And then we have a break of structure right here. This is our key level, our main break of structure that we are looking at after already analyzing that the market on the higher time frames is trending down. So let me take that off so it doesn't look so busy in here, and this right here as well. So now that we identified that we are looking for price to move to the downside, we have to look for our 3 criteria. Our key break of structure, okay? Our key break of structure is around our kill zone time is this right here, okay? This is the break of structure. And then you can see these levels of resistance up here, okay? Right, price is resisting this zone right here, and this is actually price coming into this gap right here. There's a gap right here where price is rejecting. This is a gap right here, okay? This is a gap in the market. Let me take that off. A gap is, in this example, the gap is the distance between the bottom of this candle and the top of this candle, okay? So this is all a gap, a zone of interest, a gap of liquidity where big players, banks are trying to get price to push up into the zone so they can take liquidity out from us smaller retail traders, and then fake out a lot of retail traders, smaller traders, and then push back into the direction. Okay, so price was rejecting at this gap, so we saw this rejection. And then price started breaking structures to the downside right here, okay, from this level, and then right here from this level. So now the main gap was formed, okay? The main gap was formed, right? Break of structure, that's number 1, okay? Number 1, break of structure. This is so important. That's why I've said it a million times. Number 2, price must create a gap, and price must pull back into that gap. To grab liquidity. Am I spelling that? I can't even see. To grab liquidity. Okay, so far break of structure right here, okay? This is the break of structure from these key levels, okay? Price must create a gap, and price must pull back into that gap and grab liquidity. Where's the gap? The gap is right here. Hold on. That's the gap right there, okay? The distance between the bottom of this blue candle and the top of this purple candle. This is the gap, okay? This is liquidity. These are short sellers that started pushing the market down, and basically the bigger players are just pushing price to get a better entry at this level where the gap is, and then hope and wait for price to push back down if price rejects, which it did. That's our third. Let's see. That's our third criteria. So break of structure, price must create a gap. There's the gap right there in this little area. Okay, this little blue box. And then 3, price must reject, I can't spell, this gap and pump back into the direction of our bias and overall market trend. Okay, so all these 3 things must happen. Okay, price broke structure, right? Minor break of structure right here. What's the best line? Break of structure right here. Okay, price created a gap. Price came back into this gap right here. Okay, and look at that wick. That wick is key because this is showing that price is rejecting this area and price is not wanting to close in this box. Okay, So that's price coming back into the gap, number 2, and then grabbing liquidity, right? And then pumping back down in the direction that we think price is going. So where's the entry? This is the entry right here. You can put your stop somewhere up here or right here if you want to be aggressive, or up here if you want to be super safe. Okay. If I would have taken this trade, this is where I would have put it. Okay. This is also on gold. So price, we like to shoot for a 1 to 2. It went to a 1 to 2 very relatively quickly. It even went down into this area, almost a 1 to 4. Okay, a 1 to 3.7 RR, which is a great return for a sniper trade. So basically, as soon as we saw price break down below this candle, this is basically where you would want to get in for that entry. Okay, so those 3 things are very important. All 3 things must happen every single time. Okay, there's going to be many times where not all 3 things happen, and you're going to want to get in, but you're actually going to save yourself from a lot of a headache, because prices maybe it's screwing around, or it's not consistent. The break of structure is not so clear. So only when all three criteria are clear do we take the move. Okay, and this is just gonna save a lot of mental space for your entire week of trading, your entire month of trading. Always looking for those A+ setups. This is what an A+ setup is for this strategy right here. Okay, and basically I'm taking this strategy and I'm running with it. You know, my goal this year, 2025, is to scale this as successfully that I possibly can. But right, I encourage you to go into the market and look for this setup. It's happening every single day. Look for this setup for whatever you trade, and just backtest it and see that it does work. You know, it's got a high win rate. Okay, so that is basically it right there. Break of structure right here. Price created a gap right here. Price came back up to the gap, grabbed liquidity, and then rejected that zone and started pumping down. Look at that beautiful pump down. Look at price now. If you were some type of swing trader, if you were like a swing trader, or you wanted to hold a position for the long term, look where price is right now. Beautiful. But that's it. Just wanted to make it short and quick, and we're gonna keep pumping these videos whenever we see these setups. That's it. Holding ourselves accountable in 2025 to back testing, analyzing these charts, trading only the A+ setups, and just leveling up and sharing the journey. That's it. Peace out. Love.